I will now take you to some basic numbers. It's a very busy slide, but don't get too perturbed with the numbers in this slide. I just want to address a few numbers on this slide. Okay, the first column is what the finance minister originally budgeted for this year. The second column is what are the revised numbers for this year. And the third column is what he's budgeting for next year. Okay, so let's look at the first two columns, which is this year. If you look at what he budgeted for expenditure, he budgeted, that's on row number 16, he budgeted about close to 11 lakh crores as the expenditure for this fiscal year. What he's ending up is with almost more than 12 lakh crores. Okay? So that is a risk. You budget for something and you exceed your expenditure budgets. This year also, if you look at it, he's expecting a very marginal increase in expenditure, 3.4%. That's because he hasn't provided fully for the subsidies, which I spoke about. So once the subsidy burden starts coming in part, this number will keep on ballooning. Coming to the revenue numbers, they are quite fine, like I mentioned. He's forecasting overall receipts to be about 3.4%. Now, if you look at the revenue numbers for this year, it is, like I said, predicated on our GDP growth numbers. Tax revenues are going to grow by 18%, which is quite comfortable. If our GDP is growing in nominal terms by 15-16%, tax revenues growing by 18% is not an issue. Last year, we had a bonanza in terms of the 3G auction receipts. It was more than 1 lakh crores. This year, that 1 lakh crores is not available, and that's the reason you're seeing that the non-tax revenues is seeing a 43% decline in his budget estimates. If you look at the non-planned expenditure, which I said is unproductive expenditure, it is to do with subsidies, interest rates, interest payments, etc. So this does not result in any kind of productive revenues for the government. It is like a committed payment which has to be made. This number has always been an underestimate. So that is a number which is going to go up next year from the 4.6 to the 5.1. If you look at the overall fiscal deficit, he's forecasting 4.6%, but this 4.6% is coming from the fact that the subsidy burden, which is going to be almost close to 50,000 crores, has not been provided only on oil next year. There's another subsidy which is fertilizer subsidy. This year, in our estimate, he has not provided for almost 20,000 crores of fertilizer subsidy which is supposed to be paid in this year. He's pushed it into next year's budget. So next year's fertilizer subsidy will be pushed in the subsequent year's budget, and that's what he's doing. So if you put that 20,000 crores in, the numbers would have been higher. So fertilizer subsidy, oil subsidy are expenditures which is not there in this budget of the magnitude which we are looking at. I'll come to that in detail. If you look at the divestments he's expecting, the public sector disinvestment program, he's forecasting 40,000 crores. Last year also he forecast, that is in FY11, he forecasted 40,000 crores. He achieved about 22,700 crores. So this is very much contingent on market conditions. If the markets are not favorable, then this 40,000 crore number will be difficult to get. If you look at the breakup of the budget, he's expecting 30,000 crores to come from telecom sector. Last year it came from 3G and broadband auctioning. This year, out of the 30,000 crores, approximately half of it is coming from recurring license fees by the telecom operator. But where is the other 15,000 crores coming from? Our estimate is that he's going to be charging the telecom companies to pay for spectrum which they have got above 6.2 megahertz to the extent of around 15,000 crores. So that's a new source of one-time revenues. It will only be one time. It won't be there for the subsequent year. Now, this means, and this is already known by the analysts who cover telecom sector, so it's not that stocks will react, but the fact of the matter is that there's going to be an outflow from the telecom industry, additional one time of around 15,000 crores, because the finance minister has already budgeted for it in our estimate. The buffers in this budget is on revenues. Revenues could be higher in nominal terms, number one. Number two, he can still dig into his cash surplus and reduce the extent of fiscal deficit. So that's another a buffer that he has. Now this is the 13th Finance Commission roadmap. The 13th Finance Commission says by fiscal year 2014, the revenue deficit should be zero. That means revenue numbers minus the expenditure for meeting those revenues should be zero. And the fiscal deficit should be 3% of GDP by fiscal year 2014. In fact, this is one of the few finance ministers who has gone and given a roadmap that he will achieve 4.6% next year, 4.1% subsequently, and then be in the region of 3.5%, still below what the 13th Finance Commission is saying, because they are saying 3%, he's saying 3.5%. But he's actually given a roadmap, and by giving a roadmap, he generally stands committed to that number. Now, for these numbers to be achieved, in my view, goods and services tax and the direct tax code has to be implemented. Because once the goods and services tax gets implemented, all the leakages in the indirect tax system will come into the main economy, and you could see the fiscal deficit numbers itself, reducing by about 1% of GDP. So this is very imperative for this goods and services tax to be implemented, and also for the finance minister to undergo subsidy reforms, which means he has to pass on some of the increased prices of fuel, fertilizers to the final consumer. Otherwise, it's getting absorbed by the government. If he does not do that, then structurally we'll find it difficult to keep our fiscal deficit at these kind of low levels. The bond market and the equity markets looks at one important figure. One I mentioned is fiscal deficit, but that has a direct impact on the government borrowing program. If the fiscal deficit is high, the government borrowing program is higher. So if you look at what he's projected, last year he had estimated that he will do 3,45,000 crores of borrowing. This year he's projecting that he'll do 3,43,000 crores of borrowing. So the borrowing program has an increase, and this was very, very positive for the markets. How is the finance minister going to be growing, GDP and yet not increasing the borrowing program? And that's because he's bringing down the entire fiscal deficit, so his borrowing will reduce. But please note, he has estimated 15,000 crores of additional short-term borrowings coming through T-bills. So the actual number is not 343, it is 358. And he has put another 20,000 crores from his cash kitty, which you otherwise would have borrowed. So actually the real borrowing number would have been 358 plus 20, which is 378,000 crores, which is more or less what the market expected. So because he has released that cash into the system, he's able to bring down the overall borrowing number, which is positive for the bond markets. However, please note that from a structural perspective, from a policy perspective, we are expecting the central bank to continue with rate hikes, and we could see another 75 to 100 basis points increase in policy rates for the next 12 months. If you look at this is a chart which a lot of global investors look at. How is India's fiscal deficit moving? And when they look at India's fiscal deficit, they don't look only at the center, they look at deficit at the state. They combine both and they see what this number is, because that is the real fiscal deficit of the economy. Now, if you look at, we had a very bad number in fiscal 2010. That number has now started progressively coming down. This is a very positive indicator for investors who are overseas, because everywhere in the world, fiscal deficit numbers are going up, and in India it's actually coming down. So that's the reason India comes out on the macro screens for foreign institutional investors to invest in India. If you look at the tax to GDP collections, last 3 years or last 2 years has been more or less stable. So that's not increasing at all. It has been, in the region of around 10% of GDP, and they're projecting a slight increase, but not, a very significant increase. Now, another aspect that I mentioned is that in this budget, he hasn't reduced the import duty on oil. Everybody thought that because oil prices are high, he will reduce the import duty on oil and it will become cheaper for us. But he didn't do that. So as the oil prices go up, the customs duty collection also increases. So that's another buffer that he has. So while there's an increased subsidy, there's also an increased import duty that comes from oil. But the extent of import duty collection is far lower than the extent of subsidy expansion. Now, if you look at the numbers, and these are numbers which I'm just putting in front of you, what is the upside you get from customs duty on oil? Now you have to, it's not a number which is readily available, so we basically do a sensitivity. We say, let's assume oil is at $80 per barrel. Then the total amount that will be required, that we'll get in terms of customs duty is about 15,000 crores. If oil is at 110, it goes up to 21,000 crores. So there's a 5,000 crore increase if the oil increases by $20 to the barrel. Okay? So that's the upside that he would get if oil prices, remain high. If you look at what he has done to the taxes, service tax was absolutely negligible in the previous decade. Gradually, he started now introducing this service tax. India is a services economy. 57% of India's GDP is services. So we need to keep on taxing these services at some stage or the other. So there's huge potential for this to basically move up. He has not changed the rates, but he's included more and more activities into the service tax net. If you look at the trends in total expenditure, the finance minister last year had forecasted that revenue expenditure will grow by about 4%. Actually, he has exceeded that. You can see the colored bar is showing an increase in revenue expenditure. This is not a good trend. We always like the capital expenditure to move up because capital expenditure is like buying your washing machine. It lasts for a long number of years. But revenue expenditure is like paying for your market purchases, your food. It gets consumed in the same day or the same year. So whatever revenue expenditure is spent is gone. Capital expenditure remains in the system for use for the future. So we would like to see the capital expenditure increasing by the government and the revenue expenditure actually reducing. But here we have actually seen that this is showing an increasing trend, which is not the best quality from an expenditure standpoint. However, please note that the finance minister has put the entire onus on capital expenditure now to the private sector. So he's expecting that all the projects and infrastructure, there's a public-private partnership, the share of the private sector will have to go up. So finance minister is saying, I'm leaving this to public-private partnerships, let me spend on the revenue side, for running the economy. On the plan and non-plan, if you look at the non-plan expenditure, which is interest payments, subsidy, that's pretty high compared to the plan expenditure. Plan expenditure is productive expenditure. It is going up, but not as much, is not as high as the non-planned expenditure. Now, this is not likely to equate for a long period of time because every year when we borrow more, the interest payments go up, right? So this number is not going to come down in a hurry unless we significantly bring down fiscal deficit, and then we see this coming down, the gray bar coming down, and the pink bar moving up. Now, this is a subsidy table, okay? The finance minister forecasted that FY11, this is the middle column, FY11 subsidy to be 1.7% of GDP when he presented the budget last year. What has come out is 2.1% of GDP. And 2.1% does not contain 40,000 crores of under provisioning for this year. Okay? Next year he's saying, again, I'm going to do 1.6. And next year when I present it, he'll have the same story to tell that I provided extra subsidy for oil, extra subsidy for fertilizers, and this number is going to go up. So he's not provided for fertilizer or oil subsidies for next year. Now there are two ways of looking at it. Number one, maybe he's looking at oil reforms. There has to be a petrol hike. There has to be a diesel hike. Maybe he's looking at oil, he's taking the view that oil prices are going to come down and therefore subsidy burden is lower, which at this point of time I don't think anybody has a clue. If you look at urea is fertilizers. Urea does not come under the nutrient-based pricing system for fertilizer pricing. Urea prices are high at the moment. If urea prices are high, the subsidy that the government has to bear is higher. So he hasn't provided for that. So this number of 1.6% of GDP is definitely going to be higher if they're accounted for on an accrual basis, not on a cash basis.